look forward to welcoming the panel. We have Mark Birrell, if you'd like to join us, Mark, John Pyall and Graham Elliott, who will individually introduce themselves and give you a little bit of a background on their experience within the MGA space. So once they've settled themselves in, it'd be good to start with Mark, who is CEO of Castel.
Good afternoon, everyone. So, yeah, I'm CEO of Castel. We're a managing general agency, and we've been trading for the last 5 years. And we back entrepreneurial underwriters who want to have their own businesses. And as at today, we've got about 14 what we call underwriting cells on board, and we transact around just under $200 million worth of GWP. Probably of more relevance to that is prior to joining Castel, I've actually been in the insurance world 40 years. My first 20 years, I was just a marine broker. But then in 1997, as a broker, I launched one of the first ever trading platforms on the internet for cargo insurance. And on the back of that, I started a business called WildNet, initially as a joint venture with Benfield. And we launched the first ever trading product, internet trading product at Lloyd's. And I did that for about 15 years. So I always say I was InsurTech version 001. But to give you an idea, we delivered probably around 140 different product lines to our customer base over that period. And probably after about 5 years of trading, we reached around £100 million worth of GWP going through our systems. So I'm looking forward to today's debate, and clearly a little bit of background but many years ago. I'm not very up to date with it.
Thank you, Mark. John, I wonder if you could introduce yourself.
Hi, I'm John Pyall. I work for Great Lakes, which is part of, obviously, the Munich Re. I head up something called the MGAA Cockpit. Hasten to add that I didn't invent the name. I was just given it. But this is the unit that's responsible for onboarding and developing new business via MGA or innovative fields. Particularly work with our digital partners unit in the InsurTech space.
Thank you. Thank you very much, John. And over to you, Graham.
Hi, I'm Graham Elliott, CEO and co-founder of Azur Underwriting. We've been going for 3 years. We're nearly 70 people now. We'll write £40 million of premium this year in high net worth insurance. And we're a sort of hybrid. We call ourselves a managing digital agency. We sit between underwriting and technology. We've got our own full stack developers, our own tech team. We've made a massive investment in doing that because we believe that's the sweet spot and the place to be. Prior to that, I ran an underwriting agency for an insurance broker called R.K. Harrison. And before that, I was a stockbroker. So I've been around the block a bit.
Thank you very much. So it's great to get a background on all the people participating on the panel. And I wonder if we could actually kick off with an interesting fact that was released recently, saying that investment into the UK InsurTech market is bucking the global trend at the moment in terms of it being up. So 1 billion of investment as opposed to 762 million in 2017. So with that in mind, I think it's interesting to kick off with our first question, which is what is needed to run an MGA in 2019? And I wonder if I can ask Graham to pick up that point.
I think you're going to need 3 things now. The first thing is it's a pretty fragmented industry historically. And I think it's going to become a scale game. It's going to get harder and harder to get your delegated underwriting authority from the likes of Munich Re, Great Lakes. And so you're going to have scale. It's going to be more expensive to take part. I think you have to have a point of differentiation. And an MGA is a brilliant vehicle for aggregating insurer appetite and producing customer outcomes. That's what it's brilliant for. It's the best vehicle in the world for doing that, I think. And you've got to you've got to think about your differentiation. I believe that means you've got to understand technology. And cloud-based technology, multi-tenant, single code, configurable systems are coming our way, and they're going to drive much more end-user computing. And the companies that onboard that end-user computing and get hold of it are going to have a structural advantage as the world moves increasingly digital. And the last thing I think you've got to have is a great culture, because you're in a regulated industry and you've got to run a business in the right way. You've got to have the right conduct, and you've got to embed that in the way that you do things. I think if you've got those three things, you have a chance.
Thank you, Graham. And from your position, John, onboarding businesses within your role, can you add to what Graham has said about his view of this particular question, what is needed to run an MGA in 2019? Thank you.
Well, I think understanding is it's a very limited word, but with wide implications. You have to understand what your customer needs are. You have to understand how you can respond quicker to those customer needs. You have to understand your stakeholder needs as well, because Graham was right with the fact that our needs keep changing as the regulatory demands on us keep changing. So we will actually keep having to ask you to do more and vary things, which means that you have to be able to have the flexibility to respond to us, the flexibility to respond to your customers' needs, and also the understanding of how those customer needs are changing all the time. You've got a whole new distribution chain out there that's occurring. Your customers are no longer looking at not necessarily looking at long tail solutions to problems. They're looking at short tail, snappy, quick to deliver solutions. And you've got to sometimes be in that market and be able to produce exactly what they need. So for me, it's you actually have to understand what everybody around you needs from you, the regulators, your own insurers backing you, and also your customers, and be able to match that demand and need.
Thank you very much, John. And I think it's interesting that from both perspectives, you're focusing on similar important issues. Before our panel kicked off, we were talking about distribution and having a robust distribution available for the model to work. Would one of the panel like to talk a little bit further about the opportunities in distribution and how those maybe tie into trust and relationships in terms of the what is needed to run an MGA?
Apparently, I'm going to talk about this. Yes, so distribution is absolutely key. I just going back to some of John's comments. Some of Graham's comments. I think you've got to have your capacity and your distribution in play to be a successful MGA. Those are key, along with everything else. I think if you look at, we're more sort of traditional. We're more of a traditional MGA than an InsurTech one. So in our case, when we bring in these teams, one of the things we look at very closely is, do they have distribution? Do they have the relationships? And we have a very rigorous due diligence process around that. And so those particular underwriters, it's key for us that they have that. But I think when you look in the broader world, certainly around the InsurTech world and what's going on today, distribution is key. And I think in my mind, there's two types of, or I'm sure I'm going to get told there's lots of different types of InsurTech, but in my mind, you've got the sort of MGA model where you've got sort of trading platforms, a bit like where I began my life. And then the other side of it, you've got more sort of processing components that can add value. So for us as an MGA, we might want to plug in one of those. But I think if you're looking at in the trading world, I think there's so much, you've got to bring your distribution, but at the same time, there's a lot of opportunity out there for new InsurTechs to look at new distribution. And I think we're beginning to see that. And I think the buying patterns, certainly in the consumer world, we're seeing that people are buying insurance in a different way, whether it's cars by the hour or whatever it might be. But so I think there's a lot going on in the distribution space, much more in the consumer space than the space I play in. But I think you'll see changes throughout all those spaces over the years.
Thank you very much, Mark. An interesting answer there. What are the biggest challenges to MGAs? And we've included Brexit in this question because clearly that is a big challenge for us all moving forward. And I wonder if under that heading we could look at some of the capacity issues, underwriting challenges, maybe the talent aspect, and keeping up with IT and software. So I don't know if, Graham, you would like to pick up on any of those points and elaborate for us.
Yeah, I mean, I think the worry you've got when you run an MGA, thing that keeps me awake at night is you're a wholesaler. You're like Northern Rock. You're taking in stuff and you're breathing out again, and you need the capacity there. And at a single phone call, you can have that capacity removed and you could be no longer in existence. So a really big challenge in a low return, low rate world with a lot of capital washing around is how do you deliver an underwriting profit and still manage to stay alive and deliver enough operating income to pay your costs. And so, and coupled with that, the big insurers that provide the capacity are harder and harder to deal with. As referred to by John, the demands that they make in conduct terms are getting bigger and bigger. And so when you put those two together, that explains why I think scale is so important. But if you don't run a business, if you run the business just to write for volume, you're going to have a business that's going to last 2, 3, 4 years, and then you're going to be closed down. So you have to do it all, and that's really a big challenge for a small company.
Yes, it is. And John, do you have any observations on capacity and how you work with MGAs that you're onboarding and taking forward as businesses that you believe in? Are there any aspects of them applying for capacity that you could share with the room that are important for us all to be aware of?
Well, honesty is actually one of the ones I would actually like. It's all very well to be optimistic when you're starting out as to how much you think you're going to grow, but it really becomes a hard and difficult conversation if that growth isn't materialising. So you've got to be reasonably honest on the outset, and if there are issues that you are actually going to be coming across which give rise to problems, right? Tell us early, get us involved, because we can find solutions, right? And we will try and work with you to find solutions. If you keep us in the dark, a bit like a mushroom, and leave us there and hope, and we discover things, it becomes a more and more difficult situation. So I would say that honesty is the best policy, because we can deal with problems together. But if you try and deal with them in isolation and we find out, it becomes a whole different ballgame.
Thank you for that. And I've saved the Brexit part to Mark because he chairs the Brexit committee for the MGAA. So you get the hot potato topic, I'm afraid, Mark, but I think you're very well versed in it. So could I ask, as a challenge to specifically an MGA or InsurTech model, what issues might be due to Brexit that we need to be a little vigilant of?
I was hoping I was going to be able to talk about capacity.
So sorry, do go back
no,
to
Brexit. So, yes, I mean, here we are on 21 or 25 days before we come out of Europe, and we still don't know where we're going. I mean, it's a massive challenge. I think, as Catherine says, I chair the Brexit committee at the MGAA. I also chair the Legal and Regulatory Committee, and I meet with the FCA on a quarterly basis. I've been meeting with the PRA a lot. And it's been interesting because 2 years ago, when it all began, it appeared that the government certainly didn't recognise that insurance had umpteen issues around Brexit. And as the time's gone on, I think the government now understands that the insurance industry is one of the most affected by Brexit. And you just look everywhere. It can be, I got my letter from Admiral or my email telling me I've got to get I can get a green card, but I've got to apply for it 2 weeks before I go. This is the world we're entering into now. There's question marks out there about where the intermediation takes place, how it takes place, how business is going to be transacted if everything changes on the 29th of March. Those questions are still out there. We're still hearing from the regulators and the trade associations on how it should be done. So what you can hear from me is I can't sit here and say this is the way, this is the answer for InsurTechs and MGAs, but I do think you have to take your own advice. You have to look at how you trade. In our case, we do 22% of our business is European based. So 2 years ago, we decided to set up an operation in Amsterdam. We originally set that up as a branch, and now we're turning it into a full subsidiary trading vehicle, which will be out there trading with our European partner brokers. But the one thing I've learned about the insurance space is Brexit is a very specific issue to individual companies. It's very difficult to just sit here and say, this is the solution. You have to look at yourself and what the knock-on effect to you is. But in my mind, it's quite frightening to see where we are today in our industry, which is massive when it comes to Europe.
Well, thank you for that insight, and we'll just have to keep a watching brief on how things develop. Moving on to something a little bit more optimistic. Opportunities for established MGAs to identify and how to grow their businesses. And there's a little bit of a vested interest in this particular question because I think that with InsurTech businesses and the proliferation of so many coming into the insurance space, and with existing businesses who run a more traditional model, I would question whether there are some excellent opportunities for amalgam businesses to come together, to work together, to maximise the strength of both individual businesses, a technology business and also an MGA. And with that in mind, I'd like to ask Graham if he believes that there are opportunities for more traditional models to develop in a way to maximise these opportunities.
Yeah, I think it's never too late to get on the bus. And I know that to a man with a hammer, every problem looks like a nail, so you'll have to take what I say with a pinch of salt. There's a lot of self-interest in it. But if you look at the world and you look at consumer buying habits, there's no question that in 10 years' time, more will be done on a mobile device. More B2B will look like B2C. There'll be more particularly data enrichment, but also some machine learning and the beginnings of artificial intelligence going on in the process. And those are fantastic and predictable trends, and I think it's never too late to start investing in them. The really fun thing is, if you get the foundations right of the business, you can start to deliver really quite cool user experiences to the end user. And I think the challenge for everybody is that insurance has been about a one-to-many, many times over, and it's about to become one-to-one many times over. It's going to go to a highly personalized, highly digital experience wherever you are in the chain. And I think the incredible opportunity is not many people are doing it. It's a $4.3 trillion industry, and everybody's on one side of the boat. That is just phenomenally exciting. And at my advanced age, I get out of bed with a spring every day because there's so much to go after. So there are massive opportunities, and as I said before, but you have to make the leap, you have to make the investment, and you have to get involved. And if you rely on somebody else to do all your tech understanding for you, you might be lucky, but you might be unlucky. So you have to know what you're doing, and you have to educate yourself. It's a massive opportunity.
Thank you for that, Graham. And I think the panel will probably agree it is an exciting time for businesses in the MGA space. Mark, I wonder if you've got any comments on that particular viewpoint of opportunity within the MGA space.
Yeah, I think there are quite a few opportunities. I think when you look around the marketplace at the moment, I'm sure most people are aware of what's been going on in Lloyd's with the Decile 10, some of the larger insurers pulling out of businesses. That creates a market in, I'm going to use the word chaos, which might be a bit of an extreme word, but when a market's got problems like that, in my book, there's also opportunities. And so from where we see it as an opportunity to get top quartile teams on board and individuals. So we're very excited by that. I think the technology element excites me. Funny enough, it probably didn't sound like it when I was talking about it, but Brexit actually excites me because we've invested in our opportunity, our business in Amsterdam. We're actually going to use that as a platform to build up our European portfolio of business. So we're going to be looking to push into Europe on the back of that. And so those are probably the main things which excite me at the moment in our industry. But there's no question there's opportunity out there.
And from an insurer perspective, John, thank you, Mark. Is it an exciting time for Cockpit? Is it an exciting time for Great Lakes in terms of the businesses that you're onboarding? Do you see that as being really entrepreneurial and lots of opportunity?
Well, I mean, it's cutting edge for us. I mean, a number of the InsurTechs that have been speaking at the conference today, Slice, Risk, Neos, they've all actually been onboarded through the MGAA portfolio with us. So if you're looking at how to start up, one of the advantages of using an existing MGA is that they have actually fulfilled a lot of the conduct risk requirements that an InsurTech may require, whilst giving an InsurTech a flexibility, right? So things like they will already have their in-house complaints handling team. They'll also be able to produce the regulatory reports that insurers will want. So standard stuff that we would expect to obtain from anybody working on our behalf developing insurance, that's produced by an MGA anyway, which means that the InsurTech can actually concentrate on what they're actually good at, which is delivering value in their space. And they're trying to grow that niche market. They're trying to develop that niche market. So when you're looking at how an existing MGA can help, what they can do is fill in those areas which an InsurTech won't necessarily have, which surrounds the regulatory requirements of conduct risk, which they really need to have.
Mm. Yes,
actually,
Graham.
one of the other things that's really exciting about this amalgamation of technology and insurance is I've sat on sort of these similar things before in different environments where there hasn't been the technology element, and the question's been, how do you get young people into insurance? How do you get the talent in? Yeah. And we've got a bunch of people who probably never in their wildest dreams thought they'd go anywhere near insurance, but they're data scientists, they're data geeks, they are programming nuts, they're product managers, product owners, and that is the lifeblood of the business, is reinventing itself. So it's phenomenal if you get the right proposition, who you can attract into the business. And I think that's the industry revitalizing itself and re-energizing itself, and that's really fun to be around.
And it's rather heartening when we've spent a lot of time trying to attract talent to the insurance sector, and it's really good to hear that actually in your own business. And would you mirror that, Mark, in terms of talent?
Absolutely. I mean, we make points of trying to bring young talent on board in our industry, and I'm a great support personally. I've had a fantastic 40-odd years in the business. My generation is going to be disappearing soon. There's a new generation coming along who use technology every day of the week. They know how it all operates, and that is going to create a massive change in our industry. And I look back to 21 years ago when I started at WildNet, and I thought I'd be sitting on a boat in the Caribbean or something with about 3 years later. It never happened because it just took time because of the mental thing. But I think these days, the young talent coming on board and what they can bring to the market will really change things, and that really excites me.
So the opportunity for all the budding entrepreneurs out there is clear to see. And I wonder if at this point we could place a poll question, but I'm not so sure whether there are any ready to go. Is there a poll question ready to put up on the board? If you interact with your iPads, I believe you can actually go on and have a look at the live poll questions as they come onto the iPad. And if you're lucky enough to be keyed into that, there's a question which says, and it's in line with what we've just been talking about, will technology totally transform the insurance sector for the benefit of society as well as MGAs, insurers and brokers? And you have some strongly agree, disagree, strongly disagree. It would be great to have some feedback from the audience as to whether they do agree with that statement. And I wonder if, while you're doing that, if you can do two things at once, could we do a show of hands to see how many people are from MGAs in the audience? Be interesting to see how many people either work at, have started, or are from the MGA space. So really very small number of MGAs. Is everybody else from a technology company? Right, okay, seem to be more people from technology company. It's just interesting to see who's participating in the audience today. Have we got the replies now from everybody on the question? Shortly, a pie chart should appear. And we have a resounding winner there, which I wish I could. So the agree seems to have equalled strongly agree. So the majority of you do agree that technology is going to transform the insurance sector. And that's very interesting to see. Thank you very much, everybody. So moving on to the next question, which is very InsurTech led, if you can just bear with me. How will InsurTech shape the market, and what needs to be done to ensure that MGAs keep up with these changes? I wonder if I can ask John that question.
Thank you. I think the whole problem we have at the moment, if you look at insurance in general, over time, premium rates have decreased and declined and declined. We've had to cut costs. If you look in the insurance world, there's been mergers and acquisitions. We've tried to become leaner. We've tried to become more efficient. And we're still struggling to make money as an industry. The margins that we live on now, I don't think anybody would have considered viable 20 years ago, right? So we're living on thin margins. In order to make money out of insurance, we've either got to expand it vertically, i.e. bring more people in to the market by introducing new and different products which people want to buy, or we have to reduce our costs. Now, that's basically where the technology can help. The technology can reduce your costs by actually making it more efficient. It can also expand your horizons. In our case, we're now writing zero deposit. Now, that is where basically tenants, instead of actually putting money down as a deposit scheme, write an insurance. Now, 10 years ago, that would never have existed. Nobody would have thought of that, but we're now writing in that market. Now, we can't tell you for another 5-6 years, as Mark said, it's a long-term game. We don't know whether it's going to be profitable or not. But what we have done is by using technology, we've driven out the distribution chain into an area that wasn't insurance related before. So we've developed new and exciting products, but we can only service those products, we can only price those products using the AI that's available now that was not available before.
Thank you, John. Mark, I'd like to ask you about that.
Well, I was just going to look back, actually, to when I was a youngster starting in the Lloyd's market in the early 80s, and I think the cost expense ratio in Lloyd's in those days was about 25%. At the same time, we had the Big Bang, and I think a transaction for a stock was around £12 a stock. Today, it's 1/100th of that price. And in the same time, the insurance industry, Lloyd's recently published its expenses, which were 41%. So the banking industry, stockbroking industry, has managed to go to 1/100th of a cost for trading, and the market I operate in has almost doubled. To me, that is a market which is just rife for change. Why it hasn't changed now is beyond belief. It's it's riddled with legacy, with people of my generation who think in a probably slightly different way to a younger generation. It is just crying out for change. It will happen. I just thought it would happen a long time ago, but it will happen. But I think it'll take about 5 or 10 years to fully flow through. But I think what's happening at the moment is really exciting, and I think InsurTech's are wonderfully positioned because that change is going to happen.
Thank you, Mark. Graham.
Okay, so the standout opportunity in the market is I don't believe reinventing risk transfer for an InsurTech. It's not a lemonade snazzy experience and we pay a claim in 1.6 seconds, brilliant as they are at that. The billions of dollars of value are in shaking down the transaction chain from a cost point of view. It's not saying brokers don't exist, because brokers are incredibly important. They're very value added. They help the end insured with risk transfer. It's just that the industry is struggling under the weight of legacy and the data decay that happens with old systems that don't talk to each other, don't data enrich. And that is absolutely saddling the industry with a huge cost problem. So Stephen Catlin estimated they were writing $6 billion, and he reckoned that of the $6 billion of premium they were writing, $1.2 billion was wasted in processes and bad technology. That is a lot of saving. And so for InsurTech, you've got to go for the big prize. And the big prize is core system. If you're playing in the configure price quote bit of this, if you're playing in the sort of like quote and bind world, you're going to do well, it's going to be great. But where you've got to go and where the industry's got to go to take the costs out is core system. And until the industry says we're going to do that, it's going to be saddled with the problem, because the legacy systems that they're running on simply cannot cope with the data requirements needed for a 21st century business. And the prize for doing it is not just a cost save. You can produce a 21st century user experience. If you're running on a legacy core system, you cannot produce that 21st century experience. So you've got a threat and a promise out of this. And the InsurTech opportunity is massive, and it's in the billions.
Mark.
Sorry, I was just going to add one more. Isn't it extraordinary that in the MGA world, where we operate in a world where you produce monthly bordereaux,
yeah,
where in the real world you press a button, the trade happens, and it sits in whoever's system.
So the world is going to go real time. It's going to go like Wall Street. Back to your point on Big Bang.
It's got to happen.
And if it goes real time, the idea of sending something called a bordereau, which is just a fancy French name for an Excel spreadsheet, which is ridiculous, 8 weeks later. Imagine if you said to somebody, here's my bank account, and tell me in 8 weeks' time what you've written out in terms of checks. That wouldn't be very tenable. And I believe the insurance companies are going to want real time. And that's going to raise the bar for the MGAs operating, because they'll need to give real-time data back. So we have real-time dashboards back to our insurer, and the actuaries know by the minute what's happening on their balance sheet. That is game-changing.
We are trying to build in API links with all of our new startup companies. We're trying to build it with our existing MGA partners as well. But you're right, the legacy problems are huge, because what happens with our existing MGAs is they've got sub-cover holders and sometimes even sub-cover holders, which cause a huge transactional delay in the system. So we are actually suffering from the legacy issue ourselves, which makes it a huge problem to get over. So you've got the new InsurTechs sprinting ahead, and our existing MGAs who are trying desperately hard to catch up.
I'm sorry to actually stop this here for a minute, in that we have an interesting question from the audience, and it's great to get that question to the panel with under 5 minutes to go. Are carriers impeding, embracing, or pushing for digital transformation? Do MGAs feel characters are the stumbling block in enabling an MGA to transform due to legacy products and systems? Who'd like that one?
Can I take
Yes,
it first?
by all means.
I mean, carriers are wonderful, but the trouble with a big company is you're not talking about one person. It's a giant corporate relationship. And so there's a little tendency to be half pregnant. People enjoy the whizzy technology. They enjoy all that stuff. It's kind of just difficult to get their head around sometimes some of the speed that we want to move at. But I think there's a real awareness in the carrier market that they need to keep an eye on this and be part of the game and part of the conversation. And you know, one has to be patient. I just thinking the way around this is I'll show them, I'm going to go around them and cut them all out and go to the reinsurance market or to alternative capital. I think that's just bloody naive, and I think you can easily go bust doing it. So you want to partner with people, you want to partner with the brokers, and you want to partner with the carriers and not fight them. But it can be difficult because it's a two-speed thing. You're moving at warp factor 10, and a week is like forever. And they're going, well, we'll have a look at this in 6 months' time. My God, what do you mean 6 months' time? We'll all be dead. So you know, it is challenging, but I think the heart's in the right place for it.
Mark, your views?
I think it's an excellent question. We'd love to be able to fire real-time data through to our carriers, and you know, I don't understand why I could do it with a front-end system 20 years ago, and I'm struggling to do it as an MGA today. But the interesting thing is that when I talk at C-level with carriers, the CEOs, they all want to do it. You talk to the technologists, they want to do it, but we still can't do it. And actually, I have a mission this year to transact business in real time with one of our carriers, and that is on my board, my quarterly board. It says by the end of 2019, we will be firing a real-time message through to one of our carriers. So it is going to happen, but there are, unfortunately, a lot of insurers have huge legacy out there, and it makes it very tricky for them. But they want it as much as we want it.
Thank you, Mark. With the last word to John, we only have 40 seconds left, so if you could pre-see it.
Okay, I mean, it's easy from a carrier perspective to say, yeah, we love to have everything, but the simple fact of the matter is we can only go sometimes at the slowest, at the quickest place the slowest people can go. So as much as we have one unit that will sprint ahead and be able to do everything really quickly, we're still hidebound by people who are still in the dark ages and virtually haven't got apart from pen and paper. In order for us to succeed, we needed to actually set up a separate unit in order to deliver the product. That's how we got over our legacy issue. And that's how you've got to look at. Flexibility is key to survival.
And on that great last note, I'd like to thank, if you could show your appreciation for the panel, please. Thank you very much.